The first time, as I see from the numbers, that it's come below 6%. You know, I have to say that monthly numbers can jump around. But it has been our view that in a gradual way, inflationary pressure is coming down. The fact that this is the first time it's below 6% is very important. And I hope that we'll continue to see that softening, which is good.
Yeah. Also, the fact that, however, the January numbers we've seen have been revised upwards to closer to 7%, which again, does not convey the right.
Well, as I said before, these monthly numbers our systems are not sufficiently robust that you don't get a reduction. Remember, if the January number has been revised upward, then the extent of slowing down of inflation is actually greater than the unrevised numbers show. But yes, there are monthly. That's why I don't think one month doesn't make a summer or whatever it is. You need to watch this. But all I can say is that inflation behavior is consistent with what the government has been saying, that it is slowly coming under control. You need to watch it certainly for another few weeks or so. But if it turns out that it is coming down, I think that will be very good news.
Also, if I may just shift from the topic a little bit, Mukesh Ambani came and met you early this morning. Also, along with him was Bob Dudley. If you don't mind sharing with us.
Well, no, I tell you, I just wanted to brief me on developments, partly in the 4G technology space, where I'd asked him to give me his sense of what are the prospects looking ahead. Because this is an area where there are huge possibilities. He also wanted to brief me on their assessment of the potential production that they can get from the KG6 basin. And that was the purpose of the visit.
Was anything on the gas pricing discussed, sir?
Well, I mean, they're very concerned, they're very keen that the government take a view. As you know, that process is underway. I mean, I wasn't able to tell him what we are going to decide, but I did say that there is an EGOM, and it will be considering the Rangarajan committee.
Mr. Chokkalingam, could you react to that number, 5.96%?
It's a welcome move, and I think it will give a very good direction to the market. And particularly the private sector banks, capital goods should take cue from that and should recover significantly.
So all in all, it does add up quite nicely at this level, because it looks like all the internals also are working in favor of the markets. You've got fuel prices inflation that's eased off, you've got food inflation that's eased off, as well as manufacturing.
Food inflation, I think it's mainly because of the base effect, but otherwise, as I said, there is a tremendous stress not only in the country, across the world. Entire world economy is expected to correct. Entire world trade is expected to correct in the calendar year. As I mentioned, 9 out of 10 commodity prices have crashed globally. So therefore, I firmly believe that we are the only one in the island of in the world talking about high inflation. Now with this, the inflation has already come down by 300 basis points. In the next 6 months to 9 months, I firmly believe that the issue of inflation would be forgotten. The issue would be more on growth and also the leveraging of Indian corporate sector as well as whole Indian economy. According to me, these are the two most important issues which both government and the RBI to address. I am very sure RBI would take it up seriously and cut down the interest rate substantially in the current calendar year.
5.96% for the month of March. Saugata, how surprised are you and how pleased are you?
Very pleased, Iman. Bit surprised. We thought about 6.1, 6.2. So obviously, I haven't seen the breakups of the numbers yet. Obviously, primary commodities, food would have contributed. My guess is that even manufacturing would have been a little lower than what we had expected. Core would probably be a little lower than what we had expected. So I think overall, I mean, this just reinforces the sense that price pressures, which had been bedeviling us for the last year and a half, are gradually beginning to come up. I mean, it's not as if there will be this gap between the WPI and the CPI is likely to disappear in relatively short order. But having said this, I think overall price pressures, inflation pressures in particular, not just price pressures, are beginning to abate.
Saugata, in all, it looks like all the subgroups, in fact, have contributed to giving us, that headline number, which is at the lowest level since November of 2009. So talking about, the data that's come out, do you think that we are finally seeing some bit of pressure easing on the supply side? Because in India, it is really supply side-led pressures which lead to a high inflation mark rather than the demand side issues.
Yes, I think you're completely right, although I think what has happened till now has been a combination of supply and demand. I think you've seen the data on rural wages, say, for instance, and a lot of the price pressures in food in particular, and even some consumer commodities have been coming in from the rural areas. It is a bit of a mystery what had been driving the rural wages to the extent that we have been seeing in the government data. But having said that, price pressures would still remain in the sense that I don't think prices are going to come off anytime very soon. But inflation being the change, the increase in prices, those pressures are beginning to come off now. Because government subventions, government subsidies, etc., the increases in these subsidies are beginning to come down a little bit. Other pressures in terms of wages, salaries, in terms of other things in the urban areas, that's beginning to come off because of the growth slowdown. Global commodity pressures, those are likely to remain fairly subdued over the course of the year, as far as we understand the demand drivers now. If commodity pressures, particularly crude, and if we keep our fingers crossed on this gold, imports of these commodities are a little bit lower, then the current account deficit will look a little bit better, which will help the rupee, at least, if not appreciate, not depreciate any further. So even that is likely to contribute to the lowering pressures on inflation. Given this entire set of combinations of circumstances, the sense is that price pressures going forward into the next year are not likely to be very, very high at this point in time.